For more on what this all means for currencies, both at home and abroad, let's bring in to the conversation Andrew Barnett, CEO and Managing Director of LTG Gold Rock. He joins us live from our Brisbane studio. Andrew, good afternoon to you. Thanks so much for joining us. The data that we saw overnight, we mentioned those durable goods orders, all seem to be pointing to a significant slowdown in that fourth quarter GDP, which we know is due out tonight, seeming to be a bit of a mixed bag of data recently. What are you expecting from those GDP figures tonight?
Yeah, look, it has been a mixed bag. We saw the Fed statement obviously not change its tune too much, but we saw a really weak durable goods data number overnight. But recently we've seen some really strong housing numbers and a really good consumer confidence number. I tend to look at the longer term and look at, where we're likely going to be in 12 months' time from now. And without question, the Fed wants to raise rates. They're on a path of raising rates. We may not see them raise rates in March or even April, but I think they're keen to raise rates now. And I think with US rates rising, and if we look ahead for, say, this time next year, where are we likely to be here in Australia? I think interest rates are probably going to be about the same, maybe even a little bit lower. So that interest rate differential narrows. So therefore, the Aussie dollar, even though we've seen a little bump back up to about 71 cents in the last day or two, where we are now, I think longer term towards the end of the year will be closer to 60 cents than 70.
That's interesting. Just your thoughts on the US dollar moves as well, because obviously investors still trying to, not sure really what to make about the US Fed, but somewhat disappointing that we didn't see too much more commentary on the US dollar, because markets really seem to be so fixated on that at the moment. Do you think the strength of the greenback would be concerning the Fed?
Well, there's a lot of debate whether or not a rising US dollar actually does negatively impact the US economy. And obviously in the first 3 weeks of this year, we've seen three major themes: oil, China, and the Fed. And I think the Fed is certainly going to tread cautiously. Janet Yellen's going to speak on the 10th of February to the House in Washington, D.C. It'll be interesting to see what she says then. But obviously in those months where we don't get her sitting down, providing her commentary and a Q&A session with the media, we always tend to be guessing after the statement because we want more. But I think if we look longer term, the Fed, at this point anyway, it wants to raise rates 4 times in 2016. I think we're going to get at least a couple, and I think that's going to keep upward pressure on that US dollar, downward pressure on emerging market currencies. Without a doubt, the yuan, RMB, call it whatever you like, they're going to need to devalue their currency between now and October, when it officially becomes a reserve currency. So I think any spikes up on the Aussie, probably short-lived.
I suppose what the Fed does and what the market prices in is two very different things, and obviously there does seem to be doubts about the path of these hikes, despite the Fed sort of sticking to their guns with 4 hikes this year. Any forecasts in terms of, you mentioned there you think the US dollar might move higher. Any forecasts in terms of where we will see it moving over the next 12 months?
Well, I think it depends on which currency we're talking about US dollar against. Certainly against something like the Japanese yen, I think we're going to be upwards of 123 to 125, the US dollar against the yen, because of stimulus coming from the Bank of Japan. I don't think we'll get it today, a little bit later today. I think we'll get it a little bit later in the year, though. Certainly against the Aussie and emerging market currencies, I think that we'll see the US dollar still remain strong. With regarding the euro, I think we'll see more stimulus from Mario Draghi next month. That will put weight and pressure on the euro to the downside. So overall, I still see upward pressure on the US dollar. Many people talk about, are we going to go into a recession in the US? The economic data doesn't particularly show great signs. Well, I think it's going okay. I think the US is doing a lot better than many other countries around the world. So I think for now anyway, we'll see continued pressure on the US dollar to the upside, emerging market currencies to the downside. And we'll just need to wait and see what level of stimulus we get from the ECB and the Bank of Japan.
Absolutely. And of course, our Aussie dollar very much moves off the back of those moves in the greenback. So similar story for the RBA here, where they're monitoring moves in the dollar. We're seeing the Aussie dollar hovering around 70 US cents at the moment. Do you think the RBA would be happy with it at these levels, in fact supporting the economy's transition?
Look, I think the bottom line with the RBA is they'd really prefer not to put rates down, and we're really stuck with our wagon hitched to China. China is slowing, no doubt about that, and they're going to need to devalue their currency over the next 12 to 18 months, I think by about another 15 to 20%. I'm certainly on the side of we're probably going to see a rate cut at some point in the future here in Australia. I think we've got a deteriorating standards of living, widening debt, all of the things that lean towards that. We're sort of not leaning too hard at this stage, but I think between now and, say, the middle of the year, I think the pressure will start to grow on the RBA to cut rates, although it certainly doesn't want to see rates go any lower. Are they comfortable with 70 cents? I think they're reasonably comfortable there, but I think we will see the Aussie closer to 60 than 70 this time next year.
All right, fantastic, Andrew. Really appreciate your time on the program. Thank you so much.
You're welcome.